I'm Charlotte McLeod with investingnews.com, and here today with me is Jaime Carrasco. He is Senior Portfolio Manager and Senior Financial Advisor at Harbourfront Wealth. Thank you so much for being here. Great to have you.
Thank you for having me. And what a fun week to be on, I guess, into the fire, shall we say.
Yes, good to have you here. We're catching up on our last conversation from all the way back in September. So a lot has changed for gold, silver, and the miners. I believe numbers to run through showing just how significant the changes should be. So let's start there because I think there's a lot to go into.
Mm-hmm. Wow, what hasn't? Look at Greenland, look at Venezuela. The geopolitics have completely upended themselves. The world continues to turn. And more importantly, we went from $3,600 gold and during our last interview to a high of 5,200, I think it was, over 5,000 in an amazing run up. Silver has gone from $42 to $120, now correcting back to $72 right now. Is that 72? Yes, $72 right now. And more importantly, the gold silver ratio. It's funny because when we did that interview in September, we hadn't gone through the 4,400 correction that started on December 1, right at the beginning of December when we touched 4,400 and then we pulled back. And we were in between the prior correction at 3,500, right? So it's important to understand that bull markets are going to always ride a wall of fear. And this is what we mean, because as they go higher, they shake out the weak hands that don't know why they're in, but also strengthens the hands of those that are coming in. What do I mean by that? On the run up to 4,400 last December, we had already gone from 2% allocation in the sector by Western wealth, I'm talking about pension plans, big money, to 4%. Well, by the time that correction was over, we shook out at least half of those people, leaving us at a 3%. I bet you that as soon as we started running up from 4,000, because we didn't go back down to 3,000 or wherever they were calling for, we started running up higher. A lot of those came in, and this time around, they're not being shaken out. I can see that in the fact that the three prior correction since we broke through 2,000 in 2024, every time the price of the commodity went down 1%, the producers were down 2%. This time, if you look at today, gold had a 14% correction, but the producers themselves, the portfolios that I manage, are only down about 6%. That's an important signal because that's exactly what started to happen at the beginning of 09 as we start the run up from 09 to 2011 as money starts to filter back into the sector. Now, the money that's coming in now is strong money. They understand that, first of all, if you look at the quarter that's just being reported, and by the way, Barrick had stellar earnings, which is amazing because to me, that is the pig with lipstick in the sector. That's a company that no matter how badly managed they are, they're so big that they're going to do well. But it signals that the producers I own, which have even better management, better leverage, better financial leverage, are going to do even better. Are setting up for a great quarterly earnings, but those earnings are being set at $4,100 gold and $71 silver. Now, silver itself, yes, it's volatile, and we could be sitting here in the 70s. I don't think so for this quarter, and we'll talk about that a little bit later. But 4,100, I don't think we're going to see in the gold market, because gold is being bought by central banks, very strong hands. Institutions haven't come in yet, right? And the fact that institutions haven't come in yet is important because you have to understand that when a pension plan around the world finally decide to hedge those bonds that are highly devaluing right now, which is the reason why I like gold, interest rates, long-term rates, not the rate that's controlled by the Fed. So let's separate the two. I keep pointing out that gold hit $1,400 at the same time that long-term rates in Japan, in the UK, in the US were below 1%. Zero in Japan. We got down to 0.07 in the US. 0.5 in the UK. Now the UK is over 5%. Japan is over 3.8, getting close to 4. And we have the US now at almost 490, getting close to 5, right? So the pension plans that are sitting on that investment that is devaluing, which is fairly big, are not going to buy the equity market. They're going to buy gold. And when they decide to buy gold, they're going to be price agnostic. They're going to say, I have $1 trillion worth of bonds in my portfolio. I got to park 5%, 7%, 8% of that in gold. Just park it. They won't care about price. So this party hasn't even started, in my opinion. The real issue is the fact that more and more people are noticing. You know, what's driving silver, in my opinion, is not the industrial demand, the electronic demand. That's set, that's there, and that's living within the context of 6 years worth of production deficits. And deficits, just to highlight it for people, means that we're not producing as much as we need. You know, the demand was for 1.2 billion, and we're only producing 900 million, an 8-to-1 mining ratio, gold to silver, which is important because, as I stated in our last interview, what's driving silver and what I think silver is going to be the GOAT is the fact that the world is waking up. You're seeing it at Costco. And by the way, you're seeing it in Toronto right now as we speak. Before our interview, I called the bullion dealer in Toronto Gold Bullion, that I always buy, to get a good gauge as to what's happening in Toronto, Canada's biggest city. Well, nobody's selling. Their demand for physical silver coins right now is going through the roof. Their calls that they're getting is to buy, not to sell. There's the little bit that was sold was quickly picked up, and they're starting waiting lists for the rest again. So anybody that says that that the demand is weaning, it isn't. And that's important because it's not the industrial demand that's kicking in. It's the fact that 1 ounce of silver and 1 ounce of gold will achieve the same result in the loss of purchasing power protection, but right now, again, at 60-to-1 cost, right? And so the demand is not being driven by central banks. The demand for gold is. The demand for silver is the average Joe, the average person figuring out, hey, I have all this money sitting at the bank. I got to buy some physical silver because there is loss of purchasing power. I am noticing that when I go to Loblaws here in Ontario, my bill is getting more expensive, right? Fuel might be down, but we're still filling up at $1.25, even though we're supposed to be an energy powerhouse. Well, that bill, that the beef, everything that people are buying is getting more expensive. So people are realizing that the cost of purchasing power, that the purchasing power of the currency is losing, and that's Canadian dollars, where gold is over 7,000. The other thing is, this is global. This is not regional. This is not Argentina losing its purchasing power, or Chile in the 80s. It's happening around the world. And so anybody that thinks that this pull back down in silver is going back to 50, I don't think so, because 50 puts it back at 100-to-1 gold silver ratio, which is exactly very bullish. Hope it goes there, but I don't think it will. The other thing is, we're back into backwardation. Backwardation is an important context of the futures market, because that means that the guys that are sitting on the musical chairs are not letting them go. They think the music's about to stop. And I think that's even more prescient today with JD Vance's announcements, which is funny. A guy that I never listened to, that I'm about to post something that he posted on, is Alex Jones. I think he's a little bit too out there, but you know what? He was talking about silver, and I fully agree with him in that if the U.S. is gonna set up a basket, a reserve of critical metals, first of all, the most critical of all metals is silver. And people better understand that, because the demand supply balance of all metals is there, but not with silver. With silver, we have physical deficits that have been running for over 6 years. So if you want to talk about something that is critical, is the supply of silver, because China is not selling them as of January, and they are the biggest refiner. And silver is a very important metal for the world. So, you know, when I look at the fact that JD Vance is saying that they're going to set up also a floor price, that's important, because people forget that while we were sitting on $1,500 gold, the Chinese were still subsidizing their gold industry at $3,500 an ounce to keep producing silver, to keep producing gold, because they understood the importance of gold within whatever changes to the monetary system are gonna take place. Gold is in the mix. Silver follows, because it's poor man's gold, right? And I think that the disconnect between even at a 60-to-1 gold-silver ratio to an 8-to-1 mining ratio is important, because that means that it's the mining ratio that sets the price. So a return to balance needs to be had, and we're not nowhere near there even at $100 silver yet. Because the real question here is not how high silver going. Forget about that. If you're thinking about that, you're not asking the right question. The right question is, how high does gold have to go to do what gold has done for 4,000 years within the monetary system? Because that is starting again, being implemented again, and that's what's going to drive things, right? So to me, what we're going through is another correction. And keep in mind that next week is Chinese New Year. So we could be into this for another week or so. But after Chinese New Year set the bottom in 2014 for gold once we took off above 2,000. It also set the bottom for silver last year once we took off. And look where we are now. So are we going through the same mechanics? I think so, because the world is interconnected. The communications are interconnected. The fact that people are buying silver, where are they going to see this as a sale or a crisis? Again, how do the Chinese write the word danger, opportunity, and crisis? Which of the two are they going to see? And by anecdotal evidence, I'm seeing that here in Toronto, the fact that the price has come down, people are seeing it as an opportunity. On the producers, it's funny because I keep running some of the numbers on, Agnico Eagle. I always talk about it. I always talk about First Majestic. First Majestic at $27 when I run the matrix at $4,000, $4,500 gold and $70 to $80 silver, I still get a price way higher than 27. So what that means to me, that nobody owns them. It's like Warren Buffett back in 1998 when nobody wanted to buy value because everybody was chasing tech stocks. The same thing. Eventually the herd will come in. I'd rather own these things when nobody wants them and keep waiting for it. And I think that's the situation right now. They're great value companies. Financially, they're extremely strong. Again, the earnings, the every quarter earnings as they come out, we're having higher and higher prices. And that's normal in a bull market. And I think that's where we're heading, similar to 2009 has already begun. And, 2009, 2010 doesn't stop to 2011. And this time around, I don't think it's going to stop, because this time around, we are rebuilding the monetary system. So I personally think, and it's highly probable, that gold will reach a level from which it will never come down again. Kind of like in 1933, where we got to from 7 to 35, didn't change again until 1975. So if history is wrong, but I'd rather bet with history, and that's what Ray Dalio and most of the bond guys are saying, because how are we going to pay back these trillions? Like, we're not talking about 1 trillion. Just in government debts, we're looking at 350 trillion. In total debts, we're talking about quadrillion, thousands of trillions. That's the real problem. That's the leaking boat. That's the water that's overwhelming the monetary system. And the lifeboat in that environment is gold and silver.
A lot of great context there, and we've got a number of directions that I think we can go in. I want to talk a little bit more about this correction in gold and silver prices that we're seeing right now, because I think a lot of people, like you say, are seeing it as an opportunity to accumulate more. But I'm also seeing people wondering, is this the top? And so I wonder if you can put that into context in terms of what you see coming. So you mentioned this financial reset. We've talked before about the massive credit bubble. So I think that would help people understand what's really going on right now.
This is definitely not the top. And for that, I will use Sultan Posner's work at Credit Suisse, who before Credit Suisse went under, he had done an amazing job, because at the time, the BRICS, the 5 countries that were setting up the BRICS, not all the countries that are joining them now, we're talking about still using gold in trade. So he posited a very interesting question, which was very logical. He said, okay, if these 5 countries were to start using gold settlement for their oil trade, only oil, what should be the price of gold? So what is he asking? What he's asking is, what do we know? We know that these countries trade X amount in oil on an annual basis. Up to about before the Ukrainian war, because that's when all of this started, they were using the petrodollar to trade that. So that was that the volume of that trade was X paid in petrodollars. So if they're going to settle that trade now in using something gold backed by gold, what he asked is, what should be the value of the gold reserves to satisfy that trade? In essence, instead of keeping US dollars in treasury to pay for that, what should be the value of their gold reserves? And he figured out it was $7,000. Now, $7,000 just for oil, never mind gas, never mind everything else, and never mind the need for pension plans to hedge all of that debt that is devaluing itself, because those retirees that are depending on that debt are going to need that cash flow. So they need to hedge it sooner or later. So 7,000 is a very conservative number. I personally think that for gold to achieve what it has to do, it needs another zero. And I think when it's all done and said and done, even I will be surprised by how high it goes, because of the mechanics of how much debt there is out there, how much global trade there is today, and the fact that everything is appending itself, right? The Western monetary system, with Trump's announcements over Greenland, anybody that thinks that that's going to stay status quo better understand that that's over. We are setting up a brand new scenario, and that's setting up in there. So gold at 47, 4,800, we're close today, still cheap in relation to the transition of things that are happening. The other thing that's really important is that everybody that has entered the trade, and it's more and more than we had when I was entering the trade at $1,500 gold, is realizing that the price is manipulated. Oh my God, I've been telling that forever, right? At 3 a.m. in the morning, they start smashing the price with paper contracts. That manipulation is coming to an end because people now are realizing, wait a minute, might as well take advantage of that. Might as well go in and acquire if they're doing that. Now, never mind analyzing why they're doing it, what's going on, right? And I think to some extent, what is happening is this reset that is occurring, and it's happening around the world, right? I like to think in terms of chess games. So I like how things are setting up. And as soon as Trump grabbed Venezuela, I said to myself, because I had already mentioned at the beginning of last year that I thought that from a geopolitical perspective, Trump's internal needs to rebuild the US would align more with China than with Europe, right? So when I saw them grab Venezuela, I thought to myself, okay, they must have a deal. Because of the fact that the Chinese ambassador went in to see Maduro, they met for an hour, 45 minutes later, the attack starts, and none of the Chinese weapons worked. Isn't that funny? So I think what was said with Maduro was, hey, you know what? We're taking our stuff. It's a swap between Venezuela for the US and the Americas. Iran goes to China, because all of a sudden, all of that noise with Iran seems to be dying down, right? Everything, and the noise with the island guy, Epstein, all of a sudden it's getting louder and louder. It's funny. The people that I would never thought would bring it up in conversation over the last week have brought it up, and they're saying, "Hey, what do you think about this?" Right? So all of this is as though we're having a complete reawareness as to what is what. And within that, all I care is gold and silver, because at the end of the day, whatever's happening on the reshaping of the global economy, whatever shape it takes, all we are is watching this. I or you or anybody that's listening to doesn't have much control over that, unless Trump and JD Vance are listening to your interviews. We're just observers in this show. But I can assure you of one thing: whatever shape it takes, gold is once again in the middle of the mix, because that's the one thing that they all trust. Right? They don't want to use the dollar, and when President Trump talks about the dollar as the currency reserve, and the Chinese talk about the yuan in currency reserve, well, first of all, since 1776, the dollar has taken how many remunerations of something different? The question I ask, it has to be a sound money system. Right. And that's definitely what's shaping up in terms of gold is in the mix. And because of that, gold has to continue climbing. And anybody that's going to argue that, well, they better read a couple of history books. When Money Dies, the title of a great book about the Weimar Republic, as it has in the Weimar Republic, Germany of the 30s, Latin America, Venezuela, Chile, Argentina, Zimbabwe, gold is always in the mix, and that's the number one form of money.
I just want to go on a small tangent. You mentioned Greenland a couple of times and the emphasis that the U.S. is placing on critical minerals. So how do you see that situation playing out? It's come up a couple of times in headlines. It seems to go in and out. So what do you see coming there?
You know what? I think it's noise because of it. The Europeans had to send their 24 soldiers out of Ukraine and into Greenland. All of a sudden, nobody's talking about Ukraine anymore. Isn't that interesting? What's going to happen with Zelensky and all the money that we've thrown there, right? And how are the Europeans going to support it? I would be more concerned with whatever's going to happen in Canada and the referendum we're running right now in Alberta, because that is a legal referendum, is within our federal constitution we allowed Quebec to have 2 referendums, and maybe they're going to have a third. Why can't we allow the Alberta to have one, right? It is part of our constitution. To me, that is more important. Because whatever happens in Canada, the U.S. is our partner, right? They're our neighbor, and no matter what happens, yeah, we want to go and look at trade with Europe or trade with China. Well, first of all, we got to build the railroads that don't go north-south, that go east-west. You know, it's a lot of noise, but how practical are they in the execution of that environment? What's more concerning is the fact that Canada has no gold. We're making all these promises. We're just taxing. You know, at least Argentina had some gold in its affairs. Venezuela had some gold in its affair. We don't have anything. Well, how are we going to build the railroads, the pipelines to get our things to markets in Asia? And, you know, environmentally and all of the other issues, forget about going through BC, because, you know, they're the most socialist province in the country, and I don't think they're going to allow it. Then you got to go through the Arctic. You have the noise in the Arctic. So, yeah, I think a lot, what is noise and what is real, what is capable, right? At the end of the day, I would be using, you know, somebody asked me about Taiwan. Is China going to invade Taiwan? I wouldn't. If I was the Chinese and I was applying Sun Tzu, I would just, if the US is going to implode economically and the rest of the world is going to implode economically, and out of that, China comes out strong, maybe Taiwan decides, hey, you know what, we might as well join up with China again because they're the leader of the world. You know what? I think that what we have to depend on is a geopolitical world that is multipolar. And the world the geopolitical power has to be divided between China and the US going forward. But before that fully happens, the US has to rebuild itself. It has to do exactly what it did during the Hoover period, when it completely isolates itself, becomes internal, and cleans up. Right. So, and I think that's what's happening. That's a setup that we're setting up more when you analyze the chess game as it's going forward. Right. And what does that mean, though, for the average person? It means more and more inflation, more and more central bank printing to keep the old debt going as long as possible, which at the end of these cycles, all central banks can do is lower interest rates to print money to buy up their long end of the curve, so interest rates don't escalate and support the markets. But again, it's no different than using a bilge pump on a sinking ship. All you're doing is printing is pumping water out of the ship at the very same time that it continues to fill up. But the lifeboats, to me, are the gold and silver. So anybody that's selling that is taking profits on gold and silver, in a way, I see it as taking profits on your seat in the lifeboat of the Titanic, because you can make some money, but jumping back on the ship, because what are you going to do? Now you're sitting on fiat again, right? What happens is, over the weekend, the Trump says, okay, we're shutting down and we're resetting, or the Chinese do it. Somebody does it, right? And so because of that, I think right now it's more important to understand what you own, why you own it, and hold on to it.
Yeah, I think that's getting very, very key right now for investors. And maybe you can talk a little bit more about how you're positioning for your clients, because we're both just back from VRIC, the conference here in Vancouver, and there's a lot of talk there from people about taking profits. And I think it was mostly to do with mining stocks, although there's also people who were talking about selling physical silver as well. So what would you say on that note?
Well, I think that's a personal decision because we've been going through this with a lot of clients, right? We've seen an amazing run up, and yeah, we've suffered some downside right here, but nowhere near what we were at the beginning of last year, or halfway through last year. I don't think we'll ever see those levels again. However, we have a couple of clients that have, one was planning to rebuild, to build a new warehouse for his factory. So we took the money out on the way up and we move it to the side so that that's available. Another one wants to build a house. So we move some of the profits as well for that to make sure that we lock in some of that money, right? Now, we have others, though, that the accounts are fairly big and it's strictly household living, their annual expenses. So, on the way up, we were analyzing and I kept saying, well, do you want me to pull 3 years worth of income at least and put them on the sidelines? This time around, with the downside, they're realizing, okay, maybe I should have done that, but they're not freaking out. What we've decided, though, is as soon as the next rebound starts, we'll pull out 1 month, 2 months, and just put it aside. These are retired people that are managing their full assets, right? For younger people, though, it's they're seeing the upside and they're seeing the opportunity and managing positions. The other thing is asset allocation. I'm always all about allocation. Right? I don't care about the price. I care about allocation. The fact that only 4% of Western wealth is sitting in the sector, I think it's silly because that's where profitability is really kicking in. And I think that eventually we're going to get to the normal concentration of allocation during economic times like this. And what I'm talking about is that during the last 100 years, 1914, right around the First World War, economic problems, 1933, the Depression, forces Roosevelt to reset gold. 1949, Bretton Woods after the Second World War. In 1980, institutions were holding over between 20 and 30% in the sector. They're only sitting at 4%, right? So the money's still to come in. So what's important to me, though, is if I have a older client that we set it at 30 and all of a sudden it's 45, well, just trim back and then we have the money. But 0 is not an allocation, right? Or 4% is not an allocation. In my opinion, anybody with sizable money has to have, if you have 10%, you're just going to protect against the purchasing power loss of your investments. If you have 20%, you're also protecting. At 30, you have that extra amount that you can rebalance and take opportunities while still maintaining the protecting your overall savings from loss of purchasing power, which is the key. Because that's what people don't yet understand. What do I mean? It's not Bell Canada. It's not your TELUS investment. It's not your Brookfield investment. It's your Brookfield investment priced in Canadian dollars. That is the problem. That is the Canadian dollar that is devaluing. And that's why gold in Canadian dollars is at 7,000. And so, I always like to use the analogy of two brothers, one that's in Germany in the 30s and the other one's living in New York. Right. And he calls him and he says, you got to buy the market here in Germany because it's going through the roof. Well, the guy does in New York, but he sees a flat return because he's measuring in US dollars. The German guy is seeing the stock market run, but he's not noticing that the Deutschmark is crashing, right? So that's why he's seeing the market increase because he's not seeing that the Deutschmark is crashing at a faster pace then the market is rising. That's why in North America, you're seeing a flat to negative return because it's the currency effect. Well, in that environment, the one thing that saved everybody was gold on both sides of the ocean because the demand for gold because of the loss of purchasing power and the fact that back then we lived in a gold-backed currency. Again, the lack of knowledge of gold is also a generational short circuit. Because anybody that younger than me never lived in a gold standard, right? So they really don't understand gold as money. They think it's a pet rock or a piece of jewelry. It isn't. It's money. Oh, and one last thing I wanted to mention about critical metals.
Yeah.
We can talk all we want about critical metals, and the U.S. has a lot of critical metals, but we have to start producing them, right? So it's about production. It's about getting those mines up and running. Right. And that's why I love my American investments, because I think that's one area where I'm going to be protected. They're not going to nationalize them, but they're definitely going to encourage the production of them.
Yeah, great point. So you're looking at U.S. critical minerals companies at the moment?
No, I'm not buying critical minerals. I'm concentrating on silver because to me, silver is the most critical of all.
Got it.
So I'd rather concentrate on that because I'm going to get a higher appreciation in price of the stocks and earnings and everything as it all settles.
Yeah. This is a theme that I've been hearing more about right now is the switch over to silver stocks. So are you looking up and down the chain in terms of size of silver companies? How are you focusing? And of course, every person is different.
Well, again, you know what? I look at my portfolio as a clipper ship, where the individual companies are more the sales within the ship, right? So my royal sales, or the main sales, the big ones, are my Agnico Eagle, my First Majestic, Equinox, and Aya, right? The big boys that are going to carry. The smaller sales, the spinnakers, those are more the smaller producers that are just getting up. You know, some like Kuya, so many. America's Gold and Silver, right? There's many of them. Same thing on the gold side. So I try to keep an allocation between gold and silver producers. I also do have some bullion for people where we're parking. I see it as cash, right? To me, buying bullion is no different than holding American dollars instead of Canadian dollars to hedge myself for the depreciation of currency itself in savings, right? But the speculation is in the companies. And as I build portfolios, within the portfolio is just a couple of developing companies, and they're all producers. The exploration, that's another game, and I keep that outside of the portfolio, and I do participate in those. But again, I always use 4 quadrants. Cost of production, reserves on the ground, which are key because those are the ones that people yet don't realize that the value of those. And let's touch base on that in a second. Geopolitical risk, where are those assets? And I'm very comfortable with the bottom of the world. I love what's happening in Argentina. I love what's happening in Chile with the new government, that they had enough of the woke thing, but it means as well that they've gone further right, which means that they're not going to be nationalizing my mines. And because of that, Argentina, Peru, Bolivia are going to follow through, because whatever happens in Chile also happens in those countries. So I'm very comfortable with investing there, investing in the US. I'm less comfortable with Mexico. And Mexico, I want to make sure that the companies that I do invest have their permits. So I'm not investing in exploration plays without permits in Mexico. I'm more concerned about Canada. Like, I don't invest. I have one play in British Columbia, but I'm more concerned about, what's going to happen in British Columbia with mining and taxes, right? So, I like Quebec because Quebec is the one province who encourages its pension plans to invest in the Quebec economy. So by default, Quebec-based companies have done way better, right? So again, within that squadron, when looking at exploration plays, I love plays one where they've already uncovered something, but then they stop working on it because we went through such a trough. One that I mentioned last time that we were just investing into just went public, Algo Grande, and they've just started releasing drill results, but they had already discovered something there. So it's going to get bigger. I think it will. The indications are there, especially since they only drilled it down to 250 meters. See, it's funny because, and that came out of Minorum, which is a Mexican play that I did buy into because it was permitted. But it was permitted because that was 3 high-grade silver mines that had stopped mining in the 1880s. In the 1908 or something like that, right around the time of the banking crisis of the late 1800s, right? That sets anyways. And so it's been sitting there unexplored, but high grade. And now Minorum is having great results because there's no better place to uncover more ore than where there was already something. And within that portfolio, this company comes out and they had already done some work, and I had looked at it, right? There's one in Peru that's about to go public that is a silver mine that very little work was done in it, but it was producing, and now it's getting restarted. So a lot of these mines that are getting restarted, those are still good to find. A lot of the new plays in Argentina, I'm particularly liking because it's much quicker to get a mine built now and to get everything going, permits and all that. That process is accelerated. The bureaucracy is really the problem, and I don't mind bureaucracy because I do believe in the environment. But what we have right now is what Montesquieu called the tyranny of the bureaucracy, right? Where it takes 20 years to get a mine running. Now, that's great for the producers, but it has a massive social cost from a purchasing power cost and much higher commodity prices anyways.
I think that gives a good idea of what you're looking for when it comes to the gold and silver companies. And I wanted to touch just a little bit more on silver market dynamics, because there's some interesting things going on right now. We were hearing about the high premiums in China. Today, I've been reading about a Chinese billionaire that's looking to short the market. So I wondered, for people looking at silver more broadly, what would you pull out that we might be missing or should pay attention to?
Backwardation. Backwardation is key, right? Because all that noise that you're hearing is all noise. It's funny, coming into this takedown about 2 weeks prior, you're starting to hear all this noise on Twitter about silver. And the first thing I was looking at is, okay, click on the icon of the person that was posting that, and 5 followers, 100 followers, right? So you knew that it was most likely bots that were doing this. So you knew it was coming. On the price of silver, the key thing, gold silver ratio, because I think backwardation and gold silver ratio are working hand in hand now, because gold's still at 4,800, right? So we're back over to a 60-to-1 gold silver ratio, right? And that can't last. The demand for never mind the fact that we already had 6 years of deficits. Now the demand is increasing that because people are buying physical silver around the world. The Costco effect hasn't stopped. People are still going to Costco, buying a lot, and they're running out very quickly, right? So I think that coming out of this price decline that we're going through, paper price decline, fiat decline, the one question I would ask anybody, if you're selling your silver, you're ending up with fiat again, devaluing fiat. So you're taking on a currency that is backed by your politician and your banker. And around the world, we're losing trust of those two institutions. This is about trust. Trust is ruining. So think about twice selling your physical silver right now. And anecdotally, people are buying more because they're realizing this price is a pullback. The beauty of the companies is we have earnings that right now the companies are still trading at a ridiculous valuation in relation to where gold and silver are. You have reserves on the ground that, that Bateman billionaire that has been playing the silver market. Just the other day, he said, I sold my miners to buy the SILJ, the index, because of the counterparty risk of the miners. Well, that's a very ignorant statement, because the counterparty risk is greater with the SILJ because you don't own the mines. You own a stake in the mine through a future contract in the SILJ, right? The least counterparty risk is the direct ownership in that producer, because whatever happens, you're the registered owner of those shares, and by default, every ounce that's in the ground of that company, and those ounces are a gift. So if you thought gold at 4,800 was expensive, gold at 7,000, again, the floor that Posner sets just for oil and the bricks, those reserves on the ground are going to get very dear when we've run out of, when this paper game, when people realize that all they've been buying is a paper contract backed by the banker that was shorting that very same silver that he's buying the contract for, right? So that is the game that they've been playing, right? And so direct ownership of silver is best if you hold it on your own, have it in a vault, and there's no better vault than the vault in the ground.
Yeah, I understand what you're saying there. And, when it comes to conversations about silver, there is always talk about market manipulation or suppression. And I'm starting to hear people saying that is coming to an end. What are your thoughts on that? Do you think that's true?
Why it's coming to an end is the awareness of people that it's been happening, because that's only going to accelerate the exit of not the paper, but of the physical. Right? People are taking advantage of the fact, oh, great, they're giving me a sale again. right? And so if that's happening around the world, the manipulation ends, because you can't manipulate it without the inventories. And let's see how many ounces of silver leave the COMEX now. And March is the big delivery month, which is why usually after Chinese New Year's, when you have that floor on the bottom and we start to run up again, how many ounces are left when everybody takes it. So are they gonna, if they want, and on top of that, if the US really wants to build a critical metal reserve, they're going to want to have silver in there as a reserve. Well, where are they going to get it from? Right? The COMEX is the only place, and you got to start producing. And how many silver producers are there apart from the ones I own, like America's Gold and Silver? The Galena mine is making a lot of money. It's in Idaho. But how many more can you count? Maybe 10 on my fingers, right? So, yeah, where's that? How are they going to fill up that reserve is what I want to know. Are they going to get it from China? No. If they're going to buy it from Mexico, perhaps, but Mexico's going to want a premium, right? Or are they going to pull Venezuela on Mexico next? I don't know, right? Well, no matter what, everything's up for redefinition. And I think with Trump, the old, and even Carney said it, the new world order that's being born, right? The question is, what world order is that going to be? Who cares? Gold is in the middle, right? And that's where I think Carney, having been a central banker, who are the people that sold our gold, are missing a little beat there in the cylinder. But I'm not surprised, because, that's normal socialist policies. Look at the results in Cuba and in Venezuela. Maybe Venezuela could use with a little bit of capitalism, something that Chile learned a long time ago.
Yeah, so almost there, but not quite. Definitely, it seems like we're heading into a new order, interesting times. I wonder, I'll let you go in just a moment, but any final thoughts you would share with investors right now on what to watch in gold and silver?
But you know what? Take advantage. All I can say is watch your allocation. If you're sitting with nothing, take advantage of this pullback that we're going through right now to get position. Get your allocation set up. We can help you if you want. That's we have the right vehicles to get people quickly positioned, but it's about positioning. Again, make sure you have a piece of the lifeboat in the monetary ship called the Titanic, because this thing is sinking. The world as we knew it, the fiat system, is over. Every government in the world is in tune except the Europeans, because they need to continue printing money. But even Canada's talking about a new world order. Well, that shape of the world order will require a brand new set of money, right? The fiat system is done. The shape of it, who knows how the ship is going to look, but it definitely, gold is going to be in the middle and silver will follow, and the producers will tag along for the ride. It's like a slinky, right?
Yeah, I think that's a good way to put it. Well, thank you so much for coming on to go over what's happening in gold and silver, the markets. This was really great, as always.
Thank you very much. Thanks for having me, and very, very timely interview, especially with today again.
Yes, absolutely. We'll have to have you back soon. For now, once again, I'm Charlotte McLeod with investingnews.com, and this is Jaime Carrasco with Harbourfront Wealth.
Thank you for having me.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.